Okay, everybody, this is the second part of the video, and now I am looking at the SPX daily chart. And as you see, we had two closes in a row above the 45-day. You have the MACD histogram is still ticking up, not showing any signs of reversal yet, but you have the overbought stochastic with the 84 and 70 reading. So what you want to see if the bearish side, with the VIX, looks like it was breaking out, and now you have this stochastic reaching overbought. You would like to see this MACD histogram put in a lower high and also put in a lower high in the market. 200-day is around the 1110 area. The 50-day, I believe, is let me slap the 50-day on there because it actually it's kind of in between the actually closed above the 50-day today, 1093.77, and that's the first day above that, and it also closed above the 45-day. It touched the 45-day on the low side, actually went slightly below it, and then it rallied. So the market is hanging in there, albeit it's on lower volume. If you look at the SPY, I usually go by the SPY volume, and you can kind of notice how ridiculously low the volume's been. The first day of this rally had pretty good volume. Next day, a little lighter, and we hung in there. That was last Wednesday. Then Thursday and Friday, very light volume, just hanging in there. Then the gap up. Actually, no, that was yeah. Thursday and Friday were light volume, but Monday was even lighter than Fridays, and on Tuesday we gapped up. Volume was a little higher, but still on the low side. And then today was, the same thing. The Intel news and still low volume. So this looks like it's just another bear rally. Looks like we're gonna put in a top within days. Probably my guess is probably tomorrow. Would it surprise me if we go a little higher? If we go to 111, I mean, if the futures are actually up right now. It looks like there was some Chinese data that came out. The data actually showed that China slowed down a little more than expected, but right now the markets were popping. Let me see what the delayed futures are at right now. Yeah, they're up 3. I mean, they were down 1.75 a little while ago, so there's a 5-point reversal there. See where that goes, because it's about to slam into resistance too. Yeah, I mean, you're looking for the lower high. You got tons of resistance in this area, and you have very light volume. At the very least, you would think we would pull back before any rally attempt. You had that infamous death cross on the indexes, the 50 below the 200. You did close above the 50 today. Could you go up to the 200? Yeah, I mean, I was thinking you could go up to 111, this area where the other breakdown started. There's pretty good resistance in there, and also the Bollinger Bands, top Bollinger Band should start contracting, so that would also potentially put a cap on the upside. So yeah, your upside is about in the 111 area, and the downside, basically, if this starts declining, this could make new lows. You could have a bounce in the 107 area. You could have a bounce at the 104.30 area. If nothing, there could be a couple-day bounces in there, or it could just rip right back down. The volume is so light that I would not be surprised if the rip right down scenario plays out. So you got to respect these bearish technicals that have been going on. Another thing is, and a lot of people are making excuses for this Baltic Dry Index, why it's coming down, but this is a crash. This is down another 4.5%. I've been following this for the last 20 trading sessions, and every day it's down, and I'm like, wow, where's the bottom here? And as you see, we broke this support area here, and we're down in 1709. When we had a total collapse of the financial system, at the end of 2008, you were in the 600 area, but I mean we're approaching those types of levels. We're actually below the March 2009 area. As you see here, to March 2009, it rallied. Then it sold back off to about 1500 or so, but we're approaching that 1500 area. I don't know if we're going to rip right through that, or maybe find support in there. That's not a good sign. And it's also the retail sales data has been very weak too. So that's something something definitely to keep your eye on. As you see here on the SPY weekly, the week's not over yet, but you have your RSI resistance up here. You put in a lower low, and you hopefully putting in a lower high. The market should, if it's going to sell off, it should try to reverse around this area. And the MACD, you got the oversold stochastic. It could go down more though. It should go down more if you're in the camp that we're going to go to 875, 900. I don't think you should have a retrieval of the oversold condition, because if that happens, you're probably going to get a pretty decent bounce, maybe to the 115 area, maybe even higher, maybe a real rally out to new highs. And I'm not really looking for that with this type of volume. As you see the volume bars there, last week's volume was really pathetic. Even if you factor in that there was one short day, still was only about a little more than half of the previous week's volume. And this week is very light, and we only got 2 more days left. We might not even match the total for last week's volume. So that speaks volumes. The monthly stochastic on the SPY, you already had the breakdown of the stochastic here. Usually when this breaks down, there's going to be a decent correction, especially when the MACD is below the 0 level without the cross. Looks like it curled down. Now we're flirting around with curling back up, but the volume just doesn't seem to be there. I'm expecting sellers to step back into the market and take this market back down. But you got to respect the bull side also. So you got to watch these short-term charts. They keep grinding out the negative divergences that are piling up. It's a pretty difficult market. Got to keep your stops in there. You got to know what your pain threshold is, and just live to fight again. If we don't catch the move right from here, you want to be able to catch the move whenever it does come, because it's probably going to be a pretty decent move. Here's the Bank of America, the rising wedge, fell out of the rising wedge, and you see here you put in 3 or 2 lower highs in the RSI, as you see over here, and you're still churning and potentially gearing up to maybe even make another run higher. Stochastic's been locked and overbought, making even lower highs, but still above the 80 line again. MACD is you got the negative crossover, but histogram's flattening. You could be making another run to go up. So you want to respect these technicals here. Looks like some of these stocks could still run a little more. Just it's a tough market. Anyway, it's pretty much all I'm going to talk about today. Keep your eye on these very near-term levels. I'm going to go over again on the 5-minute. As you see here, 110.10 is a critical area. Also, this 109.80 should be another resistance area. But you don't want to see this market. If the market goes above 110.10, it's probably going to run to 111. So that's my take. I'm not really sure what's going to happen. There's some Chinese news. You got to see how the market reacts to that. I think you got Google tomorrow after the bell. Should be an interesting day, and it'll be interesting to see how the rest of the week does, and how this market closes out. It'll tell us a lot what's going to happen in the next couple weeks. All right, have a good day, and thanks for watching the video.